Most people leave behind the wrong assets, not because they do not love their family, but because they do not understand how inheritance really works. I've seen families inherit a timeshare and get stuck with fees, a vacation house that ends up in a fight, a traditional IRA and they get slammed with taxes, business and they have no idea who's in charge. And I've seen other families inherit the right assets the right way and keep far more of their wealth. I'm Toby Mathis, I'm a tax attorney, and today I'm going to show you the 6 best assets to inherit and the 6 worst assets so you can stop leaving your family problems and start leaving them something they can actually keep. Because not all wealth transfers the same way. Some assets are liquid, some are tax friendly, some are easy to divide, and some are just expensive headaches dressed up as wealth. So let's jump in. Number 1 best is cash. Oops. The number 1 worst, timeshares. Let's go over these. Cash is boring. There's no tax benefits. You don't get a step up in basis. It's just boring dollars. That's exactly why it's good. Cash is simple. It's liquid. It's easy to divide, easy to understand, easy to use right away. When somebody dies, the family often needs liquidity immediately. Funeral costs, mortgage payments, legal fees, maintenance on a house, just keeping life stable while everything else gets sorted out. Cash solves that. No appraisal fight, no buyer needed, no annual dues, no weird market to contend with, no family debate over who gets the weekend in July. It just works. Now, I'm not saying, hey, have a pile of cash, all your assets in cash. I'm saying have some cash because that'll help. Now compare that with one of the worst assets that you can inherit, which would be timeshares. Timeshare is the opposite of cash. Instead of liquidity, it comes with annual maintenance fees. Instead of flexibility, it comes with restrictions on when you can use it. Instead of being easy to sell, these things can be really hard to unload. Sometimes you can't give them away. Some people inherit a timeshare and realize very quickly that they did not inherit an asset. They inherited a bill, and that's the difference. Cash gives your family options. A timeshare can trap your family in ongoing costs in a very limited resale market. So yes, cash can be boring, but boring is beautiful when your heirs need simplicity. Number 2 best, life insurance. Number 2 worst, I'm just going to call them collectibles. Go ahead and put the haterade down in the comments, all you collectors. Life insurance is one of the best assets to inherit because it's fast, it's liquid, tends to be very clean. When somebody dies, the family does not need more complexity. They need money they can actually use. They need flexibility. They need something that can stabilize the situation right away. Life insurance does that. It can help with living expenses, debt payoff, funeral costs, taxes, just buying the time or the family time to breathe. That is what makes it so valuable. It's not just the amount, it's the speed. Now compare that with the worst version. Inheriting a pile of collectibles and hard to sell personal assets. Not all are created equal, but I'm talking in general, art, a bunch of coins, stamps, classic cars, boats, memorabilia, specialty jewelry, niche collections like firearms. On paper, those things look really impressive. In real life, they can be an absolute mess. I just went through this on an estate. It took me months to get rid of certain firearms because they were of a specific type. They were machine guns. And it was a pain in the cartouche to get the right paperwork and to get these things transferred. Same individual also had a very large boat, and months and months and months of negotiation, of trying to find people that could even give it a value. It ended up being, quite honestly, salvage value because there were so many costs of maintaining it. It just wasn't worth it. It was such a pain in the neck. It was in a different state. Heirs didn't want to deal with it. Nobody wanted to deal with it. When we have that type of stuff and you have collectibles, your heirs now need appraisals. They're going to need to be able to store it. They're going to need insurance. They need to find the right buyer. Now they have to figure out whether the thing is actually worth what you said it was worth. And even worse, there's a good chance they're going to get taken advantage of because they do not know the market. And there is a pressure of maintaining. It's whatever that, it's like a pressure that's pushing down on them. What am I supposed to do with this thing? They're paying storage for it, whatever. They feel like they have to sell. And in many cases, they don't have a choice because there's expenses that need to be paid. So life insurance gives your family money. Collectibles give your family homework. One of them gives flexibility, the other gives them a project. And that's a big difference. Number three, I'll say the best for number three is appreciated brokerage assets inherited at death. So I'm going to be saying stocks at death. What's the worst? Selling the stock and then giving the cash. I'm just going to say selling stocks pre-death. This is where tax planning really matters. This is the reason it's really important to me. One of the best assets to inherit is an appreciated brokerage account, stocks in the account. When there could be stocks, mutual funds, similar investments. They can be an excellent asset to leave at death because inherited, they receive a step up in basis. And here's what that means in plain English. Let's say that mom bought Apple stock for $100,000. And by the time she passes, it's worth $500,000. So she bought it for $100. Now it's worth $500 when she passes. That's $400,000 of unrealized capital gains. If she sells it pre-death, she triggers tax on those capital gains. Boom. $100,000 at least is gone up in smoke. If she waits, a child inherits at death, so the good side, and she inherits at death, that can wipe out a huge amount of built-in gain because she paid $100, it's now worth $500. The tax basis when she passes is now $500,000. There's $400,000 of no taxable gain. That is a huge difference. And that is why appreciated brokerage assets are often one of the smartest assets to inherit. Now let's look at the worst version. Mom or dad sells appreciated assets during life just to simplify things. They pay the tax and then they leave after-tax cash. Now we love cash, remember, we still love cash. What we don't like is we just got hit with the tax. So this is our example. Mom sells the Apple stock and pays $100,000 in taxes. That may feel cleaner, but in many cases, it's just voluntarily paying tax that may never have been necessary. And that's not simplification, that's erosion. And families do it all the time. They liquidate a beautiful asset, trigger a tax, and then hand the kids less wealth than they otherwise would have received. And this is true of all appreciated capital assets, by the way. Stocks, bonds, CDs, but also things like real estate, other business interests like LLCs and partnerships, things like Bitcoin even step up. These all step up. Gold and silver step up and avoid taxes that would have been incurred if you sold them prior to passing. So if the asset is appreciated and the goal is inheritance, selling first is often the worst move. Number 4. Best one is real estate. And I'm going to put a W there, see if you can see that, with a plan. It is real estate with a plan. What is the worst? Vacation problem. I'm just going to say vacation property or real estate without a plan. You might not be able to see that when I step in front of it, because let's be real, real estate can be one of the best assets to inherit, but it can also be one of the worst. The tax side can be great. Like a brokerage asset, appreciated real estate is going to receive a step up in basis at death. That can create a very favorable tax result for your heirs, and that is the good version. A valuable piece of real estate plus a clear plan, even better. Who gets it? Does it get sold? Does it stay in trust? Does one child get to keep it while the others get value elsewhere? Maybe they get cash and somebody else, child 1 gets this property because they always loved it, and child 2 and 3 get cash, brokerage account, or other business interests. When those questions are answered, real estate can be an excellent inheritance. For example, if you follow Anderson and you have a blueprint, then you're going to be gold. If you have that real estate holding company that we talk about and you use a living trust, you're golden. But what if you don't? Let's talk about the nightmare version. So let's say you have a vacation home. Fantastic. Maybe it's a beach house, it could be a cabin, some other piece of real estate. It doesn't matter, but you left it to multiple heirs with no instructions. And this is where things start to go sideways. We always see it. One child, they want to keep it. The other one wants to live in it. One can't afford the property taxes. One never goes anywhere near it but wants to have a say about what to do with it. One thinks that they should get to use it more because they live nearby. Now the family's not inheriting a gift. They're inheriting, negotiations. And on top of that, the property keeps generating costs. There's always going to be insurance, repairs, taxes, maintenance. Maybe there's a mortgage, maybe there's HOA. So I would just say real estate's not automatically bad, but real estate without a plan can be horrible. Real estate with a roadmap can be awesome. Real estate with multiple heirs and no roadmap, it can destroy your family. It can literally blow you up. So we love real estate when there's a plan. Real estate otherwise can be really dangerous. Number 5, the best. I'm just going to put Roth accounts, like a Roth IRA. The worst, traditional. I'm just going to say, keep it easy, a traditional IRA. This is one of the clearest tax contrasts on the list. A Roth IRA is often one of the best retirement assets to inherit because the tax treatment is usually much cleaner for the beneficiary. You don't even have to worry about stepping up the basis because the whole thing's tax exempt already. That doesn't mean that there's no rules. There's still inherited IRA rules that you got to follow. But from an income tax standpoint, inheriting a Roth is usually far better than inheriting a traditional IRA. Why? Because when you inherit a traditional IRA, it comes with a built-in tax bill. I don't care if it's a spouse or a child. So let's say your child may inherit the account, but when they're taking the money out of your account, those distributions are taxed as ordinary income. So if it's the asset's not really the account balance. Let's say it's $100,000 in an IRA. The asset is really the account balance minus the taxes that you got to pay on the way out. So it's $100,000 and you're in the highest tax bracket, that could suck. If it's $100,000 and you're in a low tax bracket, maybe not as bad. But that's why a traditional IRA can be one of the most misleading inheritances on the list. It looks big. Hey, I see $100,000, but part of it already belongs to the IRS. A Roth IRA, by contrast, is cleaner. Same inheritance category. They're both a $100,000 account, but a very different tax experience. And that's what makes Roth so attractive. You get a Roth for $100,000, you got $100,000. I get a traditional, it's probably going to be something far less than that. Number 6, a family business with a succession plan. It could be awesome. I'm just going to say, noticing something here. Family business with no succession plan is the opposite. Make sure you can see it there. Family business, no plan, horrendous. Family business with a plan, great, because sometimes the best inheritance isn't about the asset itself. It's about the structure around it. And a family business can be a fantastic inheritance if there's actually a succession plan. Who's in charge of it? Who votes? Who manages it? Who gets bought out? Sometimes you have multiple kids. And like, what happens if one child works in the business and the others don't? Maybe you have an easy thing where they get bought out, the ones that don't. Maybe there's different voting rights. Maybe somebody likes the real estate that you work on, and you say that's part of your family business, and you plan ahead of time. And then this family business becomes a legacy asset. But if there's no succession plan, like over here, it can be chaos. And it can be nasty chaos overnight. Now the family is grieving, and at the same time they're trying to figure out things like payroll, customers, managing the dang thing, decision making, ownership, whether the business should even continue. And that's a terrible time to start planning, is when you're grieving. You just lost somebody who's generally critical to the business, and all of a sudden it's just a mess. And that's true of inheritances generally, by the way. Assets left in trust where there's a plan. I'm just going to highlight this when you see that little plan. That can create control, protection, stability. They can protect the inheritance from things like creditors, divorces of the beneficiaries, bad spending habits of the beneficiaries, drugs or alcohol, immaturity, family pressure. But if you just leave assets outright to the wrong person, it just makes a mess. It's the opposite of planning. So the best version is the right asset with the right structure for the right beneficiary. Take some thought. The worst version is the valuable asset with no plan, no trust, no guardrails, and no thought about who is actually receiving it. That's how wealth disappears. So let me pull all this together. The 6 best assets to inherit are not the best because they sound impressive. They're the best because they do one or more of these things very well. They transfer cleanly, they reduce tax friction, they avoid unnecessary conflict, they protect the beneficiary, and they preserve more of the wealth. So let's go back over the list. The list, number 1, best, cash. Worst, timeshares, opposite of cash. Best, life insurance. Worst, collectibles and hard to sell personal assets. Best, stocks, appreciated stocks, inherited at death. Worst, selling them first, paying that tax that you didn't have to, and then leaving cash. Best, appreciated real estate with a plan. Worst, vacation properties or shared real estate with multiple heirs, no roadmap, no plan. Best, Roth IRA. Worst, traditional IRAs or typical retirement accounts. Best, family business with a succession plan. Got my family office, I got my structure, put it all in trust. Worst, family business, no succession plan or assets left outright to the wrong beneficiary. And here's the mistake families make over and over again. We see it all the time, so don't feel guilty if you haven't done this. A lot of people will do the hard part. They'll start a trust, but they do it halfway. They start doing a plan and they do a will, but they never actually complete everything. They get the trust, but they never fund it. They keep the business, but they never create the succession plan. They end up with the no plan. They own appreciated assets, but gosh, they're getting towards their deathbed, or they're getting towards the end, and they sell everything, and it triggers taxes for no reason. Or they do something like this. They put a kid on title to their house right at the end so that they could avoid probate. And for tax purposes, they just lost their step up in basis on that chunk. There's like, hey, I just put my kid on it. I just gifted them an asset and they get my basis. That's the same thing as me selling it. Or they leave a vacation house to 3 kids and hey, it's a family cabin. And they never explain what's supposed to happen next. So they just put them all on title. And they figure the family's going to figure it out. That's how wealth turns into bad inheritance, where you end up with a mess and you end up with people hitting each other. So don't ask, what's the most valuable thing I can leave my kids? What you really want to be asking is what gives them the best result after taxes, the logistics of the transfer, and after real life shows up. Because the best inheritance is not the biggest one. It's the one that keeps your family together and that your family will actually keep. It's about your legacy. And that's how you preserve, protect, and prosper. By the way, type estate down in the comments if you want help from one of our professionals. If you want help building your inheritance plan that actually works for your family, then I'll put a link below, or you can just type in that word estate. And you can schedule a free strategy session. By the way, like and subscribe, and I'm going to leave you a couple more video ideas right here. God bless.